Hello, BitQueens. Welcome to today's training session. Christy Emmanuel. If you're just joining us, this is a session we hold every Sunday, 8 p.m. West African time, 7 p.m. GMT, to learn about the different aspects and areas of blockchain technology, about cryptocurrencies, and how we can empower ourselves with the knowledge and tools that we get from these training sessions. You're welcome to today's session, and it's no different. In fact, today's session is going to be very interesting because we are continuing our conversation on key metrics that you need to understand when taking advantage of any investment or tokenization project. So it promises to be very in-depth. We are building on last week's conversation. And so if you were not part of that, please feel free to go to our YouTube channel and watch that. And like I said, today promises to be very insightful. I mean, you are going to discover things that you didn't probably know about token economics, because that's the mainstay of our conversation. Token Economics, a woman's guide to smart investing in tokenized assets. So we're building on that conversation, and it promises to be in-depth. So welcome, ladies, again to today's conversation. Carol, welcome. Mary, Eve, Ruka, Madam Gwemi, I see you. So without wasting any more time, I'll just go up now, pull up my screen so that we get right into our conversation. So welcome, ladies. Like I said, we're building on our previous conversations, and today promises to be really in-depth. So allow me to share my screen now so that we get started. Now, let me know if you can read my screen at this point. Can you read my screen?
Yes,
welcome,
clearly.
ladies.
Yes, we can.
All right. Thank you so much. So we are continuing our conversation on token economics, a woman's guide to smart investing in tokenization asset or tokenized asset. This is part 2. So in our previous session, we looked at the meaning of token economics. Like I said, if you missed that presentation, please feel free to go back to our YouTube channel to catch up with all the conversations we had. So we looked at what token economics mean. We looked at what a token even means, the different types of tokens, and of course, the different factors that drive token supply and token demand. We had a wonderful conversation. So today we're building on that, and we're looking at key metrics for picking out any tokenized assets. But before that, I'll quickly introduce myself. So if you're meeting me for the first time, I'm Christy Emmanuel. I'm a blockchain educator and founder of BitQueens. BitQueens was founded following my 7 years journey into the blockchain space. So I'm welcoming you to BitQueens, a platform for blockchain education for women, a supportive community where women learn about blockchain, about cryptocurrencies, about Web3, and how they can take advantage of all the endless opportunities that are within this space. What we do here is to make your learning easy and enjoyable so that you build the confidence and passion to participate and benefit from the endless opportunities that we have in this space. So today is one of such days. We share with you in-depth understanding about a particular part of area of blockchain technology so that you can make sense of it and see how to benefit from that. Right? So what's the highlight of our today's conversation? We're going to look at why token economics is very important. As a smart investor, why should you consider this part of your due diligence? Because this is based off of our previous conversation on the due diligence checklist. That is those things to look out for when picking out a tokenized asset for investment or participation. Why that project makes sense, and of course, the key metrics for token evaluation, meaning what are those key things to check when evaluating a token, if that token backing a particular asset has value or not. So that's exactly what we are going to be doing today. We started with the foundation or with the introductions last Sunday, and today we're going to be building up on that. And at the end, we are going to interact as usual. So at this point, if you have any questions, if there are areas you want us to highlight more or experiences you want to share or contributions you want to make, that will be the time to do so. again, you can feel free to drop your questions, your thoughts as we go on in the chats, you know, so that in the course of the presentation, I'll be able to incorporate it. And if I'm not able to do so, then we'll take all at the end. Of course, sharing your thoughts will also help others follow through with the conversation. Whatever is striking you, whatever understanding you're getting, you could also share so that other women can benefit. That way, it's interactive, it's inclusive, and we're all learning. So with that said, let's get right into it. So the first thing we're looking at is why token economics matter. Why is it important? This is really very important. We said that token economics focuses on the part of a project that allows you understand the idea, the value proposition that that project is providing. And so if you are getting into a project, then token economics will help you determine the value and functionality of those tokens. It's not just about creating tokens and launching them on exchanges, for instance, or selling them to investors without having any real value backing them. Remember, these tokens represent real world assets because the broader conversation has been on tokenization of real world assets. So you want to understand the value it represents. And so diving deep into token economics allows you to determine the value and the functionality of these token. So that's one reason you should pay attention to token economics, right? Another is that it impacts the potential for return on your investment. If you really understand the idea, the value, the functionality behind a particular token, then it can greatly impact whether you're going to be making profits or you're going to be having returns on your investment. Because at the end of the day, you are an investor, and investors want to build their funds. They want to see capital appreciation. They want to be sure that it is worth their time, their energy, and their money. Then the next thing will be liquidity, because token economics allows you to understand the liquidity of a project. Liquidity basically means how much funds are put into that particular project. And if it is possible for you to exit that project because there's liquidity. You know, one of the challenges some projects have is that they don't have enough liquidity, meaning that there's not enough funds, you know, in that project. And so when they want to exit, maybe they want to sell off their tokens for other assets or just exit the market, they don't find people willing to buy because there is no liquidity. But if there is liquidity already made available, then it gives you the ease of entry and exit. And then you can plan when you want to go in, you can plan when you want to exit the market. So that's why it matters. Of course, it helps you to know how sustainable that project is. Is it for the long term? Are they forward thinking? Are they progressive? Or is a question of they just want to get investors to buy into their projects, they make some money and they run off with that. So this will help you ascertain the sustainability of that project. That way you can plan your participation in that tokenization asset and see if it fits your investment goals, because there are people who want to invest for the midterm. There are those who are looking to invest for the short term. There are those who are looking to invest for the long term. So by this way, you will know if it fits your investment goals or not. And of course, this is one way to assess risk. And once you understand the risks involved, then you can also design strategies to manage them. So the list is not exhaustive, but these are the key reasons you should pay attention to token economics when assessing a tokenized asset. So with that said, let's look at the key metrics. We have a number of them, but today is going to be part one of the key metrics because this is the mainstay of today's conversation. We want to know those key things we need to look out for or evaluate when checking tokens that back an asset before diving in. This is part one, and we're going to be looking at 4 key metrics for token evaluation for any tokenized asset. So let's get started. The first thing you want to check is token supply. I know last week we looked at what drives token supply and token demand. The first thing you need to know here when it comes to token supply is to first of all know what total supply is. So total supply is the maximum amount of tokens that will ever exist, the highest number of tokens that will ever exist for that project, whether they are listed or released already or not. That is the total number of tokens backing that asset. So that's what we call total supply. So let's take a hypothetical project and call it XYZ real estate project. In that project, you can have 1 billion tokens, meaning that this XYZ real estate project has been divided, that is, its ownership or part ownership has been divided into 1 billion tokens. So the total supply represents the maximum number that there will ever be for that project. So that's one thing you should know, because this informs how far the project will go. So if you have supply that is so much and the demand for the tokens are less, you will already tell that in terms of price movement or per capital appreciation, the value will not move, as it were. So except the company or the project has mechanisms set in place to make the tokens deflationary with time. We're going to come to that, in our subsequent sessions. But just understand that token supply represents all the number of tokens that will ever exist for that project. So in this hypothetical project we call XYZ real estate, we have 1 billion tokens. So in this case, 1 billion is the highest number. Now let's look at circulating supply, which is another key metric or sub-metric within the token supply, is circulating supply. So what is circulating supply? Circulating supply is the total tokens that are in circulation. And these are the ones that have been released. It doesn't include the ones yet to be minted or mined, right? Just the ones that are already in the hands of investors, in exchanges that are already being traded or sold or bought in the exchanges, just basically the ones in the hands of the general public, the investors. So this is the circulating supply, right? So in this example that we've given, the circulating supply here can be, for instance, 300 million tokens, meaning that 300 million tokens are already in the hands of investors, the public generally, as it were, those that are trading, those that are hoarding, those that are buying, those that are selling, whatever they are doing with it. 300 million represent the circulating supply in this example. This is important because movement shows that there is an active community backing that project. So as we are discussing, I want you to be understanding why this is important, why you should be considering it. If you have circulating supply to be 300 million, that suggests that about 30% of the total amount is already released. And you can go to the exchanges and see how much it is traded, 24-hour volume that has been done and all that and all that. So this is really very important. It helps you determine the token velocity. Token velocity means how much it moves, how fast it moves from one person to another, from one hand to another, the activities basically in the exchanges. So all that we're going to be discussing, but that's what circulating supply means. Now, let's look at the insiders tokens. Now, this is one part that's usually not considered to be part of the token supply, but it is. Why? Because this represents the tokens that the team hold. Because this is a project, we have different components that make up this project, not just you, the investors. We have the team, maybe the founder and the team. We have the treasury. We have those who got in during the pre-sale. We have the foundation, the company managing the project, and other components that make up the project. So these components are given certain quantity of the tokens to hold. And of course, these tokens are not open for trading. It's not open for buying and selling. That's why they're called insiders. So these insiders tokens are often subjected to vesting period or lockup period because they are the main people involved in the project. We don't want a situation where they wake up one morning and sell off their own and the project goes bad, which is what sometimes happens during some of these projects that don't have any value backing them. What happens is that the team and the people behind it, they hold their own tokens. And when the general investors or the general public are not even paying attention, they sell off their own tokens. And before you know it, that particular project is losing so much value that those who invested lose money, but the team make money. So a project that has integrity, that has value behind it, will definitely have their tokens in lockup period or investment period. Investment period means a time when they're not able to sell off their tokens or take it out or trade it to show their commitment to the project since they are the team, right? So these insiders tokens are not part of circulating supply because they are not released out yet, right? Until maybe after 2 years to 4 years or 5 years, when the project has stabilized and has gained sustainability and has also gained acceptance and adoption. Okay, so in this example, we have 50 million tokens to be insiders token. So what this means is that the team, the treasury, reserve fund, development, project operations, and what have you, have 50 million tokens, right? And these tokens will not be available for trading, for selling, and what have you. So that's about token supply. And this is a very key metric that you should pay attention to, because this determines if the value of the project is going to go up or not, if you are going to make capital appreciation on your investment or not. This is really very key, right? So these are areas you should look out for when checking out the token supply. What's the total supply? What's the circulating supply? Okay, what quantity of the total supply is the insiders tokens? Why the insiders tokens is not considered part of circulating supply, it is considered as part of the total supply, because this represents everything that will ever exist. So that's the distinction. Circulating supply is the tokens that are already in the hands of the investors. Insiders tokens are tokens that are in the hands of the team, but also part of the total supply. I hope we're having a great time and we're following the conversation. Please feel free to share your thoughts and areas you want me to throw more light on, and we'll be glad to do so. So let's go to the second one, which is market capitalization, or market cap for short. What is market cap? It measures the total value of a coin in circulation. So we talked about circulating supply. Now, but circulating supply is just number. If you want to know what that number represents in terms of dollar equivalent, that's where market capitalization comes to play. It tells you the amount of money already invested or funds already invested in that project based on the circulating supply, based on the number of tokens that are out there in the exchanges in the hands of investors, whether they are actively trading in or they are keeping the tokens in their private wallet. So it measures the total value of tokens in circulation. So going by the example that we have, this is how to calculate market cap. So market cap is current token price, what the price of each token in the market is, multiplied by the circulating supply. So let's say the current token price is $10, right? And you have a circulating supply of 50 million, right? In this example, it means that the market cap will be $500 million. That's the market capitalization in this example. So the current token price and the circulating supply, you multiply the two, it gives you what the market capitalization is. Even if the tokens are 1 billion in number, it does not represent the market capitalization. Market capitalization works with the circulating supply. That is the valuation of the tokens that are already in the hands of investors, right? Like you and I, or in the exchanges, or wherever they may be, in private wallets or whatever. So all the circulating supply multiplied by the current token price, will give you market capitalization. But I want you to understand that market cap is not a stable amount. It fluctuates, because if there's a fluctuation in the current price at any time, the valuation for that token will drop, for that particular project will drop. Let's say this drops to $5, right? This will eventually be around $250 million. If it goes up to maybe $15, I think that should be around $750 million. So this will be dependent on the price. So the market capitalization is determined greatly by the price, the movement of the price. So at every point in time, you want to see what the market capitalization is and what that translates for you. If the market capitalization is increasing, it means that there is more adoption, right? Or the value, if there is more value, because price increases with value, right? It is the value that makes the numbers make sense. If the value is poor, there's no good value proposition. It's just a matter of time, it will begin to drop. People will begin to understand that, oh, this project has no value, and they begin to sell off. And when they sell off, it starts to drop. The price will start to drop, and the market capitalization will also drop. So what informs the price or value of any project that is providing real solution is the value that they're building. As the value is increasing and more awareness is coming, there is more adoption and people are getting involved, then the market capitalization will keep growing, right? So that's for the market capitalization. Now let's go to trading volume, right? Trading volume is a key metric. You might be asking, why trading volume? Because it tells us how active the holders, the investors, the community are with this project. If you have a community that is actively trading, it means there is activity, there is utility, there is involvement of investors, there is value, the same value, and so they are actively trading. So this will be the amount of tokens that are traded within a specific period of time, usually measured in 24 hours. Not that you cannot measure in 7 days. Of course, there is the 4-hour trading volume, there's 1-hour trading volume, there is 7 days trading volume, there's 30 days trading volume. But the one that gives you, true picture is the 24 hours volume. It shows you how much money has come into that project in the last 24 hours. So you can see how much volume was traded. Sometimes it could be up to 50 million, 60 million, 100 million, 500 million, done within 1 day. It shows you how active that project is and the utility it's providing. So this is very key to determining the value that a project is bringing. Why? Because first, it shows there's liquidity. Liquidity means there's funds already in the project, which is making it possible for buyers and sellers to meet at the marketplace. If you are a buyer, it means that there's somebody willing to sell. If you are selling, it means that somebody is willing to buy, right? All this tells you that there is activity happening within that project. And that can give you the confidence to take action because there is activity. It's not a dormant project. There are some projects you go to, you check them out on exchanges and you see that nothing has happened. The charts barely move. When you go to exchanges, you see these things. They are called candles, right? They tell you the price movement. So when it's red, it shows that the prices are coming down. When it's green, it shows the upward direction. People are buying and all that. There are some you come and you will not see any movement. It's literally not moving, right? It's just stagnant. And when you check the last 24 hours volume, you will see something like $20,000, $50,000, $100,000. It doesn't really show much of activity, which means something is fundamentally wrong. It's either the project has not fully kicked off, or the community is not active, or the project is yet to pick momentum. So a number of reasons could inform that. But basically, a project that is active, that is providing value, that has gained acceptance and adoption, you will definitely see price movements, especially for projects that we already know that are established, right? Like Bitcoin, Ethereum, though these are not specifically tokenized projects, but if you go into the exchanges, you can literally see the price movement, price action, people are buying, people are selling, and you can see the candles moving up and down. So that shows you that there is active community behind those projects. Same thing is applicable here. So that's for liquidity. That will show you that there's liquidity in that project. You can also see the market activity, like I've said, people are buying, people are selling, and all that. You can also see the price volatility. It tells you how volatile that project is. Sometimes you see coins or tokens whose price just move up very sharply, and before you know it, it just drops almost the same way in which it went up. So the volatility will be seen, and sometimes those kind of projects are indication that there must be something not well with that project, because projects that are providing value, in my own point of view, you see the price appreciation. It might be gradual, but it's appreciating. Over time, you can see the price history. But some of these projects that are out there, you just suddenly see the price, there's a price spike. It just goes up, and then the next thing is it comes down and you are losing almost everything. I've seen a number of those projects. And sometimes when I look into it, I just know there is something not fundamentally right about this project. And before you know, such projects just goes out and it just dies, basically. So you want to look at that critically. That's why trading volume is important. These are the information and insight it will be giving you, price volatility. Now, token value, of course, I've mentioned this, is going to help you assess the value that that token is bringing. Remember, I keep saying that the numbers will only make sense if there is value behind it. So it is the value that makes the numbers make sense. So you have to pay attention to value all the time. Of course, it helps you to calculate the market capitalization at every point in time. Yes, because the price of the token will determine what the market capitalization is based off of the circulating supply. Of course, you will also know the token velocity. Token velocity is how easily tokens are moved, or how fast it moves from one hand to another, how it gets transferred from one investor to another, from one address to another. Because if there's an active trade, active users, you can already see people buying and people selling and all that. So it tells you the movement of the tokens, how they are easily transferred, right? You also get to see the investors' sentiment. Here, you know if people are bullish or bearish on that coin. That is, if they're optimistic about that project or not. So all these are information that you get using trading volume as a key metric to determining a tokenized asset. That is the token that is backing a tokenized asset. I hope this is making sense and that you're getting value. Now let's look at the last one because of time. This is the token allocation or distribution metric. So what does this basically mean? It means the total distribution of the tokens. In the example we gave of 1 billion tokens, this is a typical example of how the tokens are planned to be distributed. So this is where tokenomics come to play. Remember, we defined the difference between token economics and tokenomics. Sometimes these two terms are used interchangeably, right? While they mean almost the same thing, there is a distinction between these two. So token economics is, you want to see the economic viability of the token. Tokenomics is the way in which the tokens are designed, the allocation, the distribution. So this will represent a typical tokenomics. That's the design of how the entire tokens will be distributed, right? So from investors' perspective, that's why we're discussing token economics. But from the builders or the founders' perspective, or those who are designing the tokenomics, this is what plays out. But the good thing is that these projects, they will show you in their white paper how they've allocated the different tokens and how they've distributed it. So once you lay your hands on any white paper of any project, you will be able to see the tokenomics behind that project. So this is a typical example. We tried as much as possible while we were preparing this to capture the major components that will make up token allocation or distribution for any tokenized project, or even a cryptocurrency project for that matter, right? So this is what it will look like. Now, you can see the different components. You can see pre-sale, public sale, in no particular order, the development fund or project ops or the reserve fund. You can see ecosystem growth and all of that and all of that. What do these things actually mean? So I'm just going to take it one step at a time. Remember, we are using our former example, which is a project that has 1 billion tokens. So how is that 1 billion token distributed? So let's go with the first one, which is founders and team. So founders and team are those who are behind the project. Of course, they have to be incentivized to stay focused and committed to the project because they are part of the project. So in this case, it means the founder and team. The founder and team here could be the developers, those who are coding, those who are building, the technical team. It can be different teams making up that project. Could be one founder or multiple founders. All the team plus the founders put together in this example gets 10%. So 10% of 1 billion tokens is 100 million tokens, which means out of the 1 billion, 100 million will be given to the founders. So these tokens are not opened, like I said earlier, it's not open for trading or selling or whatever. It's investing. It has what we call vesting period. It's locked up so that the founders don't sell off. And this may last from anywhere around 2 years to 4 years or even 5 years. All right. So that's for the founders. Another component of token allocation is the development fund. So this will go for all the development, or, of course, the project has to keep developing. Nothing is cast in stone. None of these projects come out perfect. There's always room for improvement. So the tokens that will help them, because this represents funds, actually, this will help them to keep developing, to keep improving, to keep expanding, and every other thing that needs to be done will be under development fund. So here is 20%, because a lot goes into developing a tokenization project. Remember, these are just hypothetical design that we put together to help you make sense of what goes on when designing the tokenomics of project. Different projects, other real life projects, the figures might differ. So this is not a one-fit-all scenario, right? So the next one is marketing. Marketing is really important. Why? Because that's when the project gets word out. They want investors to understand the idea behind their project, what value they're offering, social media and the rest, influencers and the rest. So this is where the 5% of the entire tokens will go to for all things marketing, to bring about adoption, to bring about awareness, to get more investors to understand their project and be part of what they're doing. So 5% here will mean 50 million. Right? So let's look at the next one, community funds. Now, community fund is a very important component of tokenized asset. Why? Because this is how the project rewards those who are participating in the project. It could mean funds set aside to host events that will benefit and create more awareness for the community, referral programs. Yes, so if a project has a referral program, this is where they take out the funds to reward community members for their activities, maybe ambassadorial programs for those who are really standing out and pushing forward their projects. So if they make some people ambassadors of their projects, they need funds to keep them committed, to keep them incentivized, so that they continue to promote and project their projects to the forefront. So this will come under community funds, and that's 50 million tokens. Now, this 50 million tokens depends on how the project designs it or the owners of the projects design it. They might decide to give the rewards in tokens. So you get the tokens maybe when you build up points, or the tokens are converted to funds and you're giving funds, maybe in dollars or any other currency that they choose. So depending on the project, you can receive the tokens or receive money or both. So it will depend on the project and how they design it. So community fund is really very important, because that's what keeps the community going. That's what keeps the community interested, especially if the project has their expansion program mapped out. That is with referral programs, with ambassadorial programs, with all kinds of programs, of course, with events where they get to showcase more about their project, and of course get attention of other experts in the field to be part, or even third parties or other companies to be part of what they are doing. So that's for the community funds. Then airdrops. Now, airdrops are tokens given out to the community or to people to drag attention. So it's part of marketing, actually. And so what they do here is they give out tokens. Sometimes it's completely free. You don't have to do anything. Just learning of the project and maybe downloading their app or registering on their platform gives you access to a certain number of tokens. But some may require you to do certain activities. For instance, signing up on their platform and maybe downloading the app, following them on social media, tweeting a post about them, or thing or the other. So it depends on the company and what they intend to do. They decide how they want to drop these tokens to you. So this is one way, again, to garner interest, to garner attention, to drag attention. Some projects out there are even doing it currently, now that we are in the bull run and all that. You hear different airdrops. But I want to also mention that you have to be really very careful when it comes to airdrops. It will be best to create new wallets. That's if you're required to register on their platforms or create a wallet or something, it will be best to use a new wallet, a wallet you've not used before for anything, that doesn't contain your assets. Maybe you have some assets in your portfolio. You don't want to use that wallet. You want to create new wallet to receive these airdrops. Because I tell you what, as much as we have good projects with integrity and good intentions, we still have bad actors in the space looking to rip off people, especially those who don't understand how this works. So you want to be very careful when opening yourself up to receiving airdrops. While they are good and they help you get started on a project, you should also be careful not to fall victim of malicious projects. Then the ecosystem growth. This will mean everything that will help the entire project and the ecosystem grow in terms of partnerships, launching new products, new services, and collaborations and all that. So that's what the ecosystem growth will represent as part of component of token allocation. So you can see that in this example, we have 80 million tokens. Then we'll have reserve funds. This is for any emergency. And in this example, it is 10%. So for anything that could happen, anything that could go wrong, this will be a fund to salvage the situation. And so this fund is not open for trading, is not open for buying and selling. It's just, put in a wallet and reserved there for the team to sustain the project with. So this will tell a lot about how sustainable the project will be, because let's face the fact, some projects have integrity behind them, but market forces and certain factors that are not within their control might affect their project. So they need to have funds put aside to be able to get the community going, get the project going without investors suffering loss. Then pre-sale, these will amount to tokens that were sold earlier on. Those who come in at this good time usually have very good deals. They are the people who believe in the project early enough, or at least willing to take the risk, even when they are not so sure how it's going to pan out. So for certain investors, this has been what has helped them maximize the value of a project or make good returns on their investment. So you have to really examine a project to be sure if you want to go in at the pre-sale stage or not. It depends on your risk appetite, right? People have different risk appetite. There are people who have appetite for high risk investment and they just want to go all in and take advantage. There are some who will not go in at that point in time. They just want to allow some time to pass for more users to be part of the community already or part of the project already before they go in. So this pre-sale in this example represents 50 million. So that's a component of token allocation. Of course, public sale is when the project is now open to the public. Everyone can now hop in on that project. So in this allocation now, it means that 20% of the 1 billion will be open for investors to purchase. So in this example, it represents 200 million. And then we have staking rewards. That's another way that projects help to sustain their projects and of course, help to grow the project. So staking is more like fixed depositing your tokens and getting rewards on top of it in the tokens, right? So what this basically means is when you buy, maybe you came in at the public sale and you purchased, let's say 100,000 tokens. The company can say, if you agree to stake your tokens, that is not sell it, not hurriedly rush to the market to sell it off and decide to hold it, you will share from the 10% we've already earmarked as rewards for those who do so. So that's one way, again, to boost your participation in a project. So instead of buying the tokens and just holding it in your wallet or maybe waiting for the value to appreciate, you could enter the staking program and get to share in the number of tokens already allocated for all those who are participating. So if you have 100,000 people participating in the staking program in this example, it means that these 100,000 people will share from this 10% that has already been earmarked for rewards for those participating in the staking program for this project. In our subsequent sessions very soon, we are going to focus on staking and demystify everything that you need to know about staking. It's something I have been part of, and I have also seen how it helps you compound your investment, whether it's a tokenized project or not. So it's a training you don't want to miss. Of course, the last one is liquidity. Liquidity is when a number of these tokens made available in the project so that people can effectively buy and sell. So it could be in the hands of market makers. There are people we call market makers. They could be individuals or third parties, but why they are called market makers is that they have a number of these tokens and make them available in the exchanges. Of course, the exchanges can also be the market makers, but in some cases, it could be just individuals or third parties that jump in good time, and let's say in this case, they have 5% of the entire tokens that are available. Meaning that if you go to an exchange and you want to sell, there is somebody who is ready to buy from you, right? So they are the market makers. And in the process of buying and selling, they make profit, because when you're buying and selling, of course, there are fees you need to pay. So that fees you pay to the exchange you're using, a part of it gets given to the market makers, because they are those who are holding the coins or the tokens, making sure that anytime you enter the market, the tokens are available for you to either buy or sell, right? So this forms a very important part of token allocation, because projects without liquidity will have issues, especially if you want to exit the market. Nobody is selling. And if there is no transparency about this liquidity and the liquidity is very low, there can be price manipulation, meaning that those who hold the tokens can decide to hike the price if you want to buy, because we don't have enough of the tokens. So they can decide to hike the price beyond the normal price of what it should be when you are making the purchase. So this is a critical and very important part of token allocation, and projects who know what they are doing make sure that they settle this part. And market makers are people who are of integrity. They also have the project's progress in mind, and so we do everything possible to make entry and exit for investors seamless. So like I said, we tried as much as possible to capture components based off of our research of different projects that we've seen across, and this will give you an idea of the different components. Like I said, this may not be exhaustive, and this may not be the way it will be captured in different projects. So you might see all of these or some of these, or even those that are not captured here, I mean the components. So it will be important for you to look through the white paper of any project that you want to take advantage of and understand what the components of their token allocation is and how the tokens are distributed. That way you will see where the value is, where the funds are, and what plans they have. From this breakdown, you can see reserve fund. This shows you that if anything goes wrong, it means that this project can say, okay, out of our reserve, we want to cushion the effect. We don't want our investors to feel the impact. Some even will have wallet called the burn wallet. So when there's too much supply, they can even use from the reserve funds, buy excess of the tokens from the market and put it in that bond wallet so that those tokens become permanently destroyed. That way, reducing the supply and then, of course, boosting the value in the market. So it depends on the project. And for me, this is one of the most important parts of tokenomics, because it gives you an idea into the minds and train of thought of those who created that project. So as we round up, let's look at why token allocation is important. It allows you to see the distribution of these tokens. You can see if it is fair or not. Then it shows you the growth plan that they have and the sustainability of that project. You also get to understand the transparency behind that project. And that will help you as an investor to trust them more, because you can literally see on paper what they plan to do with the tokens that they've created. They are not overly taking the tokens to themselves and waiting for the price to appreciate and then they dump it into the market. No, you can literally see how they are distributing everything, the plans they have to continue funding the community and funding the project and making sure that everything goes well and all that. That will boost your trust in that project. And of course, it helps you evaluate whether the project is for the long term and the potential it has to appreciate and the stability that it is going to attain in the future. So these are some of the most important points why token allocation matter in every tokenization project. So on this note, ladies, we come to the end of today's conversation. You did it. You were here from the beginning to the end, and I'm happy that we had this conversation. I must tell you, it's one of the most thrilling for me. In fact, putting this together with the team and organizing this, we found out a lot. And I'm happy that you were here to be part of it. We hope you got great value as much as we were excited to put this together. If you're enjoying the conversation already, but you're not part of our exclusive community, this is the call to join us. You see what we do here at BitQueens to educate you, to help you make sense of what's happening in the crypto space so that you not only empower yourselves and also make smart choices. So what you do now is to scan the QR code on your screen, and it takes you to our onboarding page to join our exclusive community. Or you can write us on info.bitqueens@gmail.com. If you're not already connected with us, this is a call to connect with us on social media. There we can continue to share more resources, have more conversations, and of course, you can share your insights with us or what you want to learn or even how you want to learn it. If you have any special inquiries, maybe you want to collaborate with us, you want to sponsor us, or you want to be part of what we are doing, please feel free to write us at info.bitqueens@gmail.com, and we're there to provide responses to your inquiries. So thank you, ladies, for being here. And it's time now to get your feedback on today's conversation. So I'll just stop sharing my screen now. If you have questions, contributions, suggestions, experiences, this is the time to do so. Okay, so let me stop sharing my screen. Well done, ladies. Thank you for still being here. Eve, Elizabeth, Carol, Madam Gbemi, Ruka, and then Ziomi. I'm sorry, I don't know what your name is. Okay, so.
Okay, good evening, ma'am. Good evening, everyone. Good evening, BitQueens. Good evening, Madam Carol. I really want to appreciate you for this lecture. Like, it's breaking, like, you took it from the bit and gathered into a picture, and I'm sure this is not even the end of the picture. So I want to first thank you for this lecture. My question is, this topic, like, especially, I don't really understand it in depthly. I don't even understand it basically, but with today's class, I kind of have a beginner's knowledge on it. So it's just a favor. Is it possible that this class can be uploaded, like, if possible tomorrow or as quick as possible, so I can go back to it again and look at it very well and ask questions on my gray areas? Thank you.
It's all right. Yeah. Thank you, Elizabeth, for your kind words and for your question. If I got you correctly, you want to know if this will be uploaded as quickly as possible so that you can have a rewatch.
Yes.
Okay.
Thank you.
Yes, that will be done. Of course, we have the link to the Zoom cloud where we recorded it. We can already share that with you. And of course, much later in the week, we'll upload it on our channel so that everyone can have access. So that can be done within today and tomorrow.
Thank you so much, ma'am. I'm grateful.
Yeah, you're welcome.
I love your smiles.
Yeah, thank you. I love you too. Thank you for your feedback. Yes, thank you. So any other person with a question or contribution or suggestion?
Okay, I have another question.
Okay, go ahead.
There was this app I came across last week. It's called Shingari. I don't know if you know it. It's created by, I think, partially Indians and another group, whereby it's just like the Web3 version of Facebook and Twitter, whereby whatever you're doing, if you're liking a comment, if you're commenting, if you're creating any maybe you're you're a content manager, or you create content on social media. So whatever content you create, it's monetized. So according to how the app is, I'm explaining this to get to my question. According to how the app is, whenever you create a content or you comment, it's generated into a token which can be converted into your currency. So my question is, in the rank of the tokens, like you were explaining the breakdown, 2% for these, 1% for these, and everything. So where does that percentage of the conversion of the tokens go to? Is it like a 2% whereby it's for public? Or that part I don't really understand it. I don't know if you get my question correctly. Hello.
I will try to rephrase it and see if I got you correctly. You said
Okay.
there is an app. There is an app, more like a social media app.
Yes.
Right? I didn't get the name.
Chingari is an Indian word, kind of.
Okay.
Like.
Okay. I'm supposing that app is built on maybe blockchain or something, more like a decentralized kind of app. I've not heard the name before, but I'm just trying to make sense of what you're, are trying to. Right. So this app rewards you, with tokens. If you create content and the content gets attention, maybe people are clicking on it, reading on it. There's basically interaction in the content, right?
Yes.
So the more views or likes or whatever you get amounts to points or maybe tokens, right?
Yes.
Okay, so now you're asking me, based off of what we discussed, what part or component of token allocation would that be?
Yes.
Okay, so that's an interesting question, but again, it will depend on what the company's token allocation and distribution is. For me, this will be more like community fund, or a way to reward the community for participating in their project. Or yes, it's a project, because it's an app does not mean it's not a project. So it's a social media project or something. So that would basically mean that's where it is. From my own understanding, it could fall anywhere. It could fall, if it were a tokenized asset, I could say it could fall in a staking rewards. But this will also mean, for me, this will most likely be in the community funds, because that's where, in the community funds, according to our class that we just had, community fund is the fund from where you reward community members, like those who are actively telling others about the project, referrals. Sometimes you download an app, you tell another person to download, they get to know that you asked them to download the app, and then they reward them with certain number of tokens. So that's how I envision that to be. Although, like I said, different projects have their own different token model, right? Allocation model. So, but based off of what you've explained, I think that's where it's most appropriate, if you ask me. It definitely won't be the founders or development or airdrops. It could even be under airdrops, like based off of what we've discussed, that could be under airdrops. But since that is if that is their main business, right? Remember, airdrop is not the main business in a tokenized project. No, that's not the main thing. The main thing is where we have the sales of the tokens, because the sales of the tokens in this, our example for tokenized project, means that you are selling tokens that represent the real assets, real world assets. So for this tokenized asset, the main business is the main sale, the token sale. All these other ones like airdrop, token staking rewards, community fund, is just to keep the community going, just to incentivize those who are participating. So if that's exactly their main project, what they are intending to do, or the value they are creating, then it will fall under token sale. That is the main sale of the token. So that's how they, intend to do theirs. Theirs is community fund or project sale, right? I hope that answers or gives you insight to what we're saying.
Thank you, ma'am.
So it just depends on the project and their token allocation model. That's how they intend to distribute the tokens for their projects. Thank you for asking that question. It's a wonderful one. I hope I also get to find out. Can you type the name of that project for us in the comments? Maybe I'll get the chance to also research it in the week. Gary Token. Okay, what's the name of the project? Again, you want to know if that project is already listed, because when you are awarded those tokens, the next thing is, can I sell them? Because that's where the main value is. Now, for you who is active, so as I'm creating social media content and people are liking and engaging and I'm getting these tokens, Can I sell them for real dollar, for instance, or naira, depending on my location? So all this will really matter. But it's an interesting one, if you ask me. It's one way to decentralize, social networks, right? We've been on this conversation where, the algorithm for these Web2 social networks determine what you see, determine what you view, how you participate. Sometimes they even censor you if you say certain things, or they consider it to be too loud, or you share certain information and all that. How about a decentralized platform where people can participate, connect with people, and also earn for participating? That will decentralize the power, because the truth is, the much we use these platforms, that's how much the founders are making money. Facebook, Twitter, LinkedIn, and the rest, they're all making money. It's not decentralized. So this is a very great initiative. I think there's one I know. Recently, I was watching one event like that, and one was mentioned. In fact, I later joined one of the sessions to really understand. Unfortunately, the project is still kicking off, so a few things were not just working, but I know that there are projects like that seeking to decentralize social networks so that it's more inclusive and people can also earn reasonably for their participation. Yes, it's not like people are not earning in Web2 social networks like Facebook and the rest, but sometimes some countries are not monetized. For instance, Nigeria, for instance, you have to do the work you need to do to get monetized sometimes, is a lot. And so having decentralized networks where you can start earning from day one, will make a lot of sense, especially for content creators and for women like us. So that's a great one. Thank you. Okay, are there more questions? If there are none, we can just call it an evening. But surely it was an interesting time coming out today to learn and to deepen our understanding about token evaluation. We took only 4 today. There are a number of them. We're going to take probably another 4 next week before we move on to understanding how staking works. So thank you, everyone, for being here. Thank you, Carol. I see your feedback. She says, yes, very informative. Thank you. Yes, thank you for always being here. Your presence alone is gold. Thank you, Madam Gbemi, for always being here. Elizabeth, thank you for your questions. Ruka was here early. Eve was here. Thank you, ladies. Let's do this again next Sunday. Please feel free to go to the community and share a thing or two that you learned. That way, we will encourage other women to be part of what we are doing. Plus, we have some great announcements coming in next week. We had scheduled to have another time for training session. We are nearing when we're going to start having these training sessions for beginners, those who just joined our community or those who are entirely new to the blockchain and crypto space. So expect that announcement in the coming days. And as we prepare, we hope you're also in high spirits to join. If you are already an old student, as it were, you can also join. It doesn't stop you from refreshing your memory. We're also excited because it gives us the opportunity to deepen our knowledge here at the BitQueens team, and of course, continue to share with you value. So look forward to that announcement in the community. And I wish everyone a fantastic week ahead. And let's keep learning, let's keep growing and thriving together. My name is Christy, and I brought this on behalf of the BitQueens team. See you next Sunday. Bye.